So I'd like to welcome everyone to the panel today. We've got two great guests. We've got Kelsey and Jesse. Jesse working at Cross River Bank and Kelsey at Locality Bank. And the topic that we want to talk about today, which is really important, I think, for the market and the SMBs specifically, is how we innovate with data and how we support SMBs in doing that. And I think it's been quite obvious in the past, couple of years that there's been this shift change due to the obvious, the pandemic and what has happened, and also how we've lent to SMBs in that period. And that's not only about data. There's clearly about certain types of services, certain types of support we wanted to give SMBs. But today we'd like to focus a bit on utilizing the data that we generate through SMBs, through transactions, or whatever it may be in banking and lending, to really improve and define a future for how we service SMBs. Before we get into the detail on I suppose answering that question, or at least sharing our thoughts, I think we should do a round of introductions. So I think, Jesse, if we can start with you, a quick introduction and maybe a bit of background about what you've been working on of late.
Sure. Jesse Honigberg. I am in charge of the office of the CEO for Cross River. Recently took that role. So prior to that, I was kind of the technology chief of staff working for a CIO. I think that, for a little bit about Cross River is we're kind of known as providing a lot of the back-end infrastructure for fintechs and enterprise clients in both the lending, payments, and banking space. And so we really have a lot of proprietary technology that we built in-house that we use to deploy at scale to fund, millions of loans a month, hundreds of, actually tens of millions of payments a month, kind of just really big scale. And, that's kind of what drew me to Cross River and really excites me in terms of how we think about democratizing that technology as we kind of have spoken on some of the prep calls, like how Cross River can really, embed to really give greater access or greater efficiency. Prior to Cross River, I held a bunch of roles at a regional bank called Sterling National Bank. I was everything from in the mortgage group, and then kind of grew as the bank grew from about $1 billion to about 30 billion. And held roles of CIO and chief digital officer. So kind of been all over the place and, always very passionate about the customer experience and how we can think about technology as kind of a lever and not the panacea for solving things.
Great, thank you. Kelsey.
Sure, so thanks for having me. I'm Kelsey Weaver. I am on the board for Locality Bank, which is a digital-first de novo that opened its doors in January of this year. So we serve small businesses with one branch, but the idea is to be tech first. And so we get a little bit of an advantage of starting from scratch. I know a lot of the banks, if they don't have their own core system, they have siloed data, and I'm a total data geek. I'm always trying to figure out, what you can learn through the numbers and how you can actually apply that. And so that siloed data piece, I think, is a huge obstacle for most financial institutions. So excited to be a part of that. I think Corey's speaking on another panel at this event, and he's our CTO, so he's a rock star. So I actually started my career more on the media side, but I was built events for CEOs and directors of banks. So I learned kind of firsthand. Our biggest conference is M&A, and you learn about the integration issues that banks have, and thus creating some problem. I dabbled in the consulting space. I started Finex Tech to put tech and banks together, speak the same language, and I actually just announced that I joined Minden Venture Partners as their head of platform. And Minden is it's a fund. It's a $100 million fund that banks have invested in to put it towards fintech. So one of the areas we're certainly looking at is how do you create that smart intelligence? How do you gather that? And so I'm excited to have the discussion today.
And it's great, the nod to Mendon Ventures. I think it's going to come up again later on that, it's so core. You're obviously looking at the future, looking at where the direction of this business is going. So we will touch upon that again. I'd like both of you guys introduce yourselves. I like to do that before I introduce myself, because I'm not the main guy here. I'm Ronan O. I'm the head of product at Validus. I joined Validus about a year ago, and a background in industry. I've worked in financial services in the UK, really focusing on SMB or SME servicing and lending and onboarding, whatever that may be, that whole world, which is kind of moving how SMBs run their businesses, how they leverage finance, and how to get to the point where we can help them grow. That has been in banking for the most part, traditional banking, I would say, high street banking. And I wanted to take that knowledge into the fintech world and go, okay, there's clearly parts of the process that fintechs generally go after, but how do we generally support the larger lenders and how they're being either challenged by smaller fintechs, challenged by smaller banks, maybe from lending that you would not expect, maybe Amazon lending or whatever that needs to be. So I've always liked to position myself in that place, and I think Validus, in our core proposition and how we utilize data and kind of serve that up to banks, is trying to do that. It's really about getting to how can we better understand SMEs and SMBs and understand what makes them tick, what are they looking for, how do they run their businesses. And I think we all agree on this call. I hope that the data is going to be the key to that. So I think I'd like to start with, and I nodded to this earlier, the pandemic has been, is perceived a shift change in how we service SMBs. And I think it's because there's been a lot of external pressure at the time, obviously, to support SMBs. They are the backbone of the economy. They are high volume of the economy when it comes to customer numbers. But they also support the types of things that we understand, the people down the street, the 10 people that work over there. So I think the shift change has been obviously in how we supported them quickly and how we supported them utilizing data that we might not have used in the past. So I think it'd be good to first touch on that. I'm going to come back to you, Jesse, to have a think about, what was that shift change, or what was your example of what happened in the past couple of years and how we've serviced SMBs and how we've delivered the services that they need?
Yeah, I think it's an interesting question, right? And you could almost say it's almost, especially if you look back at kind of the binary the binary example of February of 2020 and April of 2020, right? And you kind of think about the way that you were servicing your customers and was an acceptable way to service your customers in February, and the acceptable way to service your customers in April, and the dramatic difference between those two things. And at Cross River, one of the things that I led and that we're extremely proud of is, I kind of led the build out of all the tech for what we did on the PPP program. And by the time, all the dust had settled, we were, the second largest unit originator of PPP loans in the country, right? And a lot of that involved partnerships, a ton of it involved using data. But really it was understanding and validating your customer and the information around them in non-traditional ways, in order to get comfortable with what people could produce at the time, right? You weren't going to get a small business to come into a branch and produce, bank statements because, no one was going anywhere. And so, I think that mindset change and I think the forced modification of what we looked at as acceptable practice really precipitated a much larger opportunity, and you see that kind of cascading forward today. And so I think that where we look at the pandemic as kind of this watershed moment in terms of what banks will accept or define as a good user experience, what they'll accept and define as a ultimate acceptable risk in terms of how they validate information or different ways they can validate information. I think there's, more broadly, a growing acceptance that, the way that is not the way it will be. But I don't think anybody has really cracked it perfectly. And so everybody is trying to latch on to different platforms, different experiences, different ways of solving that problem. And, I don't think there's a perfect way to do it. Data is the foundation of all of it. But, whether you're going to use a AI or ML model, or you're going to use non-traditional credit data, or you're going to think about, collateralizing receivables or all these other things, right? They all really are foundationed on having good, clean information and making sure that not only do your business and tech people understand it, but that your risk and your credit and your compliance people get it. Because if they don't understand fundamentally that you can get to the same or better place with potentially a different route, right, you're not going to really be able to kind of enable any large scale change.
Yeah, I think you've touched on risk. I think that's something we should probably consider throughout this. it is, banks and lenders are always trying to price risk in essence and understand risk. And maybe we were forced to take more risk than we expected at the time, but for the right reasons. Kelsey, in terms of your experience in the last couple of years and what you've seen as we keep calling it, maybe the digital leap, I think is another term we've used, or the step change, what do you see?
Yeah, I mean, I think I felt bad for the banks in some ways. They had the brunt of everything on them. They're not only having to learn how to go from physical to digital work staff. The PPP loans that come out with the rules that kept changing or were murky, and you have customers that want their money safe, but they want it now. And so banks are really, and they were the heroes. I do think they've gotten a lot of accolades, and I think it was, finally a great time for banks to get a positive light on, they really helped the small business, to make it through. I think what was interesting, you have the Cross Rivers and the Connect One. I think you guys are in that corridor where you just like rocked it. In some of the rural areas, they're having to download a form, print it, write it in, then either email it or drop it off or something at the bank branch in mid-COVID. So I just think, there's a lot to be done for, or a lot to be said for being prepared a little bit, or if you had some, if you have the cloud, or, Encino, I believe was like a tool that was used a lot. Yeah. So, I mean, I think that some banks were better prepared. I also think that the consumer, I'm not going to pretend I like to go to a branch, but I do like to talk to a person. If it's, you do want to understand what you're doing with your money. You want to be able to access your money the way you want to, or a person if you want to. And I think that the demands of the everything now is interesting and slightly unfair, or, is what it is. But you have also during, when COVID hit, it's people that never thought that they would use digital banking. Like I have a 90-year-old pen pal, and I'm trying to explain to her how to use an iPhone with no visuals because she doesn't understand FaceTime, so she keeps putting it to her ear. And like you have someone like that that's trying to access digital, which you would normally think these are the people that would go in. So I think you saw a whole flooding of the people that needed digital and needed to learn it. And so I think that was a big change too, is just which banks were prepared, how who could actually vet them quick enough and kind of step in and be the savior. But you also had a whole new generation, or at least user base, that all of a sudden is now trying to use digital. So I thought that was pretty interesting kind of takeaway.
I think so. I mean, that must be one of the biggest takeaways, is actually, we used to maybe consider when we were in these organizations that, I have a group of people I need to target that are digital savvy. I have a group of people that aren't. I have a group of people that I might want to keep a branch open for. There's a group of people that need telephone banking. But actually, those lines have been kind of blurred. You probably assumed, as you've kind of said, that the digital savvy group would be the, 20 to 40. But actually, this has kind of forced another hand. And even like, the power in the UK, the power of the QR code. The QR code had a comeback. It's like everyone's just so used to these things. Yeah. And now our contactless banking. I mean, I walk into banks now, or shops now, and I don't even take cash. They're just done, because there was that obviously sanitary element, or it's clean. You could contactless, don't use cash, but not as many have gone back. So I think those will have maybe indirect impacts, and of course that impacts not just the consumer, but the SMB. Those are guys who are receiving payments. Those are guys who need to lodge cash, and how is that going to shift? I think it's clear that there has been benefits, and we've talked about those, but it's not that we've solved the problem overnight, right? We've been forced down a route maybe, but I think, and I'm not going to use the term post-pandemic because we are not post-pandemic, but I think, as we try and move on and get back some normality around banking and lending, there is still some gaps, I would say, in the service, how we service SMBs and what they're looking to achieve. And I think you touched on it, Kelsey, so I might go back to you in that it's what is their need? What are they trying to achieve? That's what we're supposed to be solving. There isn't a technology problem per se. I mean, there never is. Technology should be solutions, but so what is the customer? What is the SMB, the business owner, trying to achieve? So, what do you think in that space? What should we be concentrating on? What's the most important thing?
Yeah, I mean,
and how we service those guys.
Yeah, I mean, I'm really bullish on marketing, branding, all things messaging. I think that for all of us, it's easier to think from ourselves than from someone else's perspective. But a small business may not know exactly what they're coming in for, but they know the problem that they have. So I think that one of the pieces is kind of trying to put yourself in the customer's shoes and using the language of the customer. What are the problems that small businesses are having, and how can you meet those needs? So I think of it as empathy. There's a book I was reading called Empathy in Action, but it's all about trying to think about whether it's your employees, thinking from their point of view when it's a pandemic and you're having to think, well, should they have to come in? Like, how are they feeling about this? And do you give them options? And then when you think about your messaging and your products for small businesses, are you thinking of them as a product that you're pushing? Or are you thinking of them as, as your customer and thinking what are their needs? And kind of you see on, some bank websites even, just thinking like, they have it sorted by product, which is their way of thinking. So I think that one evolutions that you'll see is, with a small business, the way a small business looks is changing, right? Like as a gig worker, like if you're a consultant, if you have your own shop, I think there's been a massive transition into what the definition of a small business even means. But yeah, I think one of the biggest areas for growth perhaps isn't even based on technology. It's using technology so that you can better the customer experience, better the employee experience, so you can still attract talent, and trying to think about how do you solve problems with technology and not just kind of technology for technology's sake.
And in a technology role, Jesse, I mean, and I've worked in technology roles in the past, we do obviously think about the user requirement, the user themselves, or what are they trying to achieve. And in previous conversations we've had, we've also talked about, in essence, the technology that you've been championing around kind of API-led integrations, API-led design. Is that what's going to enable us to be responsive to the need of customers? In that it's not maybe pushing SMBs down what the bank think is their channel of choice, but actually being a bit more flexible?
So I think that if I was to actually, here's a great example, right? That my wife's cousin owns I live in Nyack, New York, about 30 miles north of New York City. And there's a fantastic restaurant that he owns called Hudson House that has amazing food, right? But at the beginning of the pandemic, like he didn't know, what was happening, right? He didn't know up from down, didn't know what to do. And so the fact that Cross River had a bunch of APIs and that, he could, it didn't mean anything to him, right? What we really looked at is, all right, well, who's the partners that we can leverage that can extend those APIs so they become relevant to him, right? And so he got his first PPP loan through his local bank. It was an absolute mess. Actually, the person he worked with, recommended that he give the funds back, which he actually shouldn't have, and he did. And, it was a complete mess. He was really struggling for like the first, 6 months of the pandemic. And then thankfully, business picked up. And then, I made sure I took care of his business when round 2 happened and put them through one of our partners and got it done, right? But I think that the APIs are really, in many ways, they're foundation that you build whatever house is going to serve that constituent, right? And so when I think about SMBs, usually there's a lending relationship involved because there's generally, cash poor, right? And so you're looking at how you're collateralizing some of their assets or even non-traditional assets. And there's some really interesting platforms out there that are doing it on invoice receivables, all sorts of interesting things. And how do you take the API framework and either choose to deeply engage and build an experience that your team can be passionate about and own end to end and say, hey, I know this persona. This is how I'm going to be able to walk into Hudson House and tell Matt, like, this is an amazing lending product for you, and we're going to wrap it into a debit card so you can have a kind of like an instant line of credit, and we're going to give you instant payments so you can get funds quicker and yada, 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 right? But that's not something that banks are really very well geared to do, right? You don't really look at the experience I was describing and saying, oh, that's a product that B of A is going to deliver, right? But you do look at it and say, hey, there's probably a really clever fintech that will lean that down to an MVP and focus it on a specific vertical and a specific geo and get it to market and then figure out what they screwed up and then iterate it, as opposed to taking a year to get something to market and then, a year to figure out what they did wrong, right? And so when I look at what we provide, it's the foundation that we can support the people who are building those really innovative, really clever experiences that can speak directly to the SMBs and power solutions that solve problems for them. I think there's absolutely a lack of awareness in terms of all the things that are accessible to them through partnerships. And then the other big issue is like, KYB, KYC, right? And like, especially when you look at less established businesses, when you look at everything that happened in PPP, right? We were, especially in round 2, there were people giving tons of funds to like Uber drivers and Lyft, so how do you validate an Uber driver or a Lyft driver, right? It's not really, they may have an EIN, but like, that's about it, right? And so how do you kind of bring this all together? Because you still have to maintain the trust and security that is the hallmark of being a bank, right? While having the flexibility to say, hey, I'm going to, or maybe it's not even flexibility, it's the humility to say, I'm not going to build this whole thing myself, right? I'm going to enable somebody else to build a super clever solution, and I'm going to be part of the infrastructure, right? And so Crossover very much thinks about itself like we're AWS or we're infrastructure for financial services, right? And so, when you put your data center on AWS, right, you're not, you could build a website, you could store pictures of your family, right? You could do whatever you want. And so it's kind of like build your own adventure. And so how do we take that same flexibility, openness, and then translate that to financial services and then do it at scale so that, if you scale to be Coinbase, right, we can process, 1 million ACHs for you a day, right? And there's those two things are very much at tension with each other, right? Creating a open enough platform and gateway to welcome all comers while having the scale and stability to, service the largest of these clients.
Mm-hmm. It's just, so there was a question that I was gonna ask, which was, is what has been going on an opportunity for the new players in the market, which you've nodded to, Jesse, or at least people who can hive off parts of the proposition and be very good at it, and then leverage what you guys have and what's externally, and then also what? Sorry. Yeah. No, that you've nodded to, and then also that the incumbents, then they're obviously feeling challenged by that, but are they solving for that challenge? Is there room for both of them? Which, to be honest, I'm sure there is. But there's kind of two things at play here. There's have the incumbents and the larger traditional banks missed an opportunity, or will they say, actually, there's some opportunity that I can happily lose? Sometimes they take off part of the business that they don't need, so I was going to ask that question, but because you answered it so well, I'm going to move on slightly. I think there is something then when it comes to data. So what I find differentiates large traditional banks, B of A you mentioned, from some of the incumbents, that actually they've been around long enough and they've been capturing an understanding of their SMBs. Maybe the important word is capturing, and Kelsey, I might come to you. They are storing a huge amount of data about what their SMBs are doing, but potentially not understanding what that means and what it tells them about their SMBs and what it tells them about what their SMBs are looking for. Yet so there's a huge amount of information and data that's captured, which is internal to those organizations. The new challengers would love access to that, but then the new challengers also get access to a bunch of stuff that sits outside of traditional banking that is also powerful. How do you see, Kelsey, one, what is the big challenge that incumbents have to overcome with the fact that they're sitting on potentially a goldmine of data, but they're not using it? And then maybe we'll come on to how do they supplement other external data sources for that?
Yeah, so I think there's interesting movement in the sense of like there's like fintech sandbox. You're seeing banks open up a sandbox for fintech to build against. I think that's a comfort factor of, they're a trusted institution and there's PII. Like, how do you make sure that, you're still being safe when you're letting a fintech access your data? I do think there are banks that are doing things like that. I can't help but think I have such a visceral reaction with Bank of America. Sorry if they're all watching, but on the business side, but just you think of these as the top, institutions that should know their customer. And I had this horrendous, and I won't go into the weeds of it, but in essence, my 16-year-old debit card account is still tagged to my mom somehow. and not any way that I can see, but I log in, there's negative $800,000 balance on both accounts. And I had to go to a bank branch to understand what happened. They said that's an internal fraud hold. So my mom had been hacked. And you think of this and you think of the data. I'd been there since I'm 16, I'm 36. So I've had this card. I've been a loyal customer. I have, all kinds of different, all my bill pay attached to Bank of America. And at the end of the day, they sent me home to call a 1-800 number. And I couldn't, I said, so I just won't have money for a little bit. And I was kind of being sassy. And, they're like, yeah, that's great. And I'm like, no, you can't just cut off my money. And then lo and behold, my credit cards start hitting my bill pay from Chase, where I've been a loyal customer, and that gets shut off. And I had the most horrendous, and you think of where, banks can utilize data. And, I do have my LLC, but that credit card got shut down because it was attached to, and it was such a nightmare. I joked I was overhoused and underbanked because it was in the middle of when I'm selling a house that I had two. And I'm like, well, I can't even access money. And so there's still, there's the way you can segment the customer. There's the way you can value loyalty. There's the way you can measure which customers you want or don't want, right? I mean, they may not want me. Once I had a low balance, I let them just hit me with fees till it closed out. But, there's the customers that most banks, I don't even know if they can define what their most profitable customer is, or products, or what products they just still have going because they've always offered it, but no one's using them and it costs a bunch to keep going. So I think that analytics on kind of the efficiencies and what are people actually using of your products is kind of a good necessary step back as well, is like, what is it that we have? How can we use the data of usage and and profitability? And I think, Jesse alluded to something about that in our prep call, so I'll let him speak to that too. But it's like, maybe you want to focus on a niche and be a sponsor before, but maybe not.
Yeah.
So I think that, the short answer, right, is that the big banks have huge channel conflict, right? And so you have a VP who owns branch bank. You have not a VP, you probably have a president who owns a regional branch banking, right? And then you have a president who owns a region of commercial banking. And then they roll up to a chief mucky muck who owns something else, right? And I think that all of these people, right, when you think about message diffusion, right, it's like a giant game of telephone, right? And so how do you really understand, what your focus is and what your value proposition is? And I think that, my Chase branch down the street, right, is fine, right? I have an account. We were actually talking about this the other day, that I have an account with them because it's down the street from me. Not because they do a great job, but because if I need an ATM, it's there. I keep enough money there not to pay any fees, and like that's it, right? And if I need to send a wire, I could send a wire easily, right? But I keep a lot of my other money with a bank that was down in Long Island when I used to live there, who just had great service. They were cool people, like, credit union, but, and like all rationality, like I'm fairly savvy with my money most of the time, right? But, it's the rational decision there is overridden by an emotional one, right? And so, I think when you think about SMBs and you think about, how they, diffuse through the channels and, whether, Bank of America or Chase or any of these guys, right? They all have, pretty robust capabilities, right? But they keep, for them, there is a very, I think, robust analysis of cost benefit for accessibility. And so, like, I could tell you, like, we go against Chase and PNC for our largest clients, right? Because they now are big enough to matter, right? But we don't go against them for startups, right? Without a doubt. And so, I think that they have a strategy of like, hey, I'm going to invest when it's worth my time to invest, and I can beat you on price once they're successful. And so I'm going to lose some of the, revenue from the early stage stuff that's usually a little bit richer, and then I'm going to pick it up on the back end when they want a money center bank or candidly a lending relationship at scale, right? They want a $50 million line of credit or something like that. That's going to be difficult. Yep. So I think that's one piece of it. I think that the overall challenge of all of this, and you brought up something really interesting in terms of like product rationalization, right? And I'll shout out, my former boss at Sterling, Rodney Whitwell, who was their chief administrative officer, who I worked with for 7 years, right? Sterling, from when they bought a bank I was with to when I left, right? grew, like I mentioned, from about $1.5 billion to about 33, right? And it was through a series of M&A deals, right? And we gobbled up somebody, and by the time we were done, we had a playbook for how it was done, right? And we knew what to do, right? But one of Rodney's things that he was most passionate about, and he grew up at Key and he ran, a bunch of product there, was that you can't be great at everything. And so when we would go and buy another bank, right, we would kill 90% of their products and consolidate them, right? And so I remember we took over a bank that was based on Long Island. That was a big bank, that had hundreds of legacy products. That was this or that, and they had them in IBS and the FIS IBS core banking system, right? And they had reporting that normalized the data and all this other stuff, right? Just so they can roll it all up to say checking, right? And you're like, well, how much of a real, do you think the customer is attaching any value to this one slice of checking that has these features? Do they even know what makes it different? And do we even know if it's worthwhile doing or what the cost of service is? And so, when we went in and bought another bank, right, the first thing we did was took a knife to saying, let's take the best of what these products are, the things that customers attached value to, and consolidate them, right? Let's make a great product that everyone understands. And so, I think Sterling has 4 checking products, right? Not 40, right? And they have 4 business banking products. I don't know if they still have it, but when I left, they did, right? And so you really had, that kind of core flexibility on the consumer and the SMB side. And then when you had larger relationships, you put them on analysis and you did, stuff that was a little bit more sophisticated. But it allowed you to convey your message through your channels, right? And so if you go back to that example with Chase and me, right? My banker at Chase, when I went in to open our account, she was like, oh, well, you get free checks and no monthly fee and we'll let you send a wire, right? And I'm like, okay, right? But the thing that I was actually interested in, I don't know if Chase still does it, but they had a private bank rewards thing where you could take your kids to some of the museums in New York and not pay anything for it, right? And so I could bring my kids to the Natural History Museum in New York, which is $100 a pop to get in there, right? And I could go for free, right? And so, she didn't have any idea, right? I had my kids sitting there next to me, we're opening the account, and no idea about how, what actually mattered to me. And I went in there somewhat educated on it, but Chase never pushes that to me and says, hey, we have this great program, blah, blah, blah. They don't ever see that I use the program, right? And so I think that if you go to the SMB side, it's really how do you understand really what drives value for your niche or your segment? And then how do you index on making sure that you're communicating that, through your products and through your channel messaging? Because, as good as your products will be, and I think that from a standpoint that Kelsey would know more than I do from a marketing and messaging standpoint, but products without the message are worthless, right? A message without the products are pretty worthless. And so the two of those things need to work together, which requires kind of all the parts of the bank kind of getting it. And if you have too much, right, it just becomes very hard to understand.
Yeah, and I do think we've come a long way because to your example, which is great with Chase, 2 years ago when I started my LLC, or 3, however many years ago, I think it was 3, you couldn't open a business account digitally, even at Chase. So now you can, I know even Lending Club Bank, which, Radius got bought by Lending Club, and then that team.
Hey, don't speak bad about them. I have a good friend who runs in investments for them or something.
I'm their customer. So unless you have a reason to leave, you don't, right?
Yeah, for sure.
But now I got distracted. I don't even know what I was talking about.
Sorry.
Sorry to your friend at Lending Club. No, but that you can but at the size that they are, I mean, you can open a business account there with the locality. We just launched, and you can toggle back and forth between your personal account and your business account. And at Chase, I have to log out and log back in, and it always logs me into the wrong one first. And so I just think, there's a lot of improvements that can be made. And one of our portfolio companies that, they actually have gone up against Palantir on the government side. They're big data convergence tool. They can take structured, unstructured, and that alone, to be able to normalize data and to gather it, I said that's your product. But then they can go further, and they use kind of external data sources and all of these things where you can use like psychographics. And for the geeky bank that wants to get to that next level, you can figure out, I don't want to know what I think there's something like, I don't want to know what a 36-year-old female wants to do. I want to know what someone like me should be doing. And I think that PFM world, I think that there should be, I don't know if it's a BFM, like the business, like what should I be spending on my rent? What is normal to spend on, should I have an office or not? And I think that's kind of the tier where data can come into play, because it's scary when you're just off on your own. Like, I'm going to run my own business now. What do I do? And that's where the bank can step through it and offer those products.
And I think we, what has happened is that traditionally you had to try and find your fit in what the traditional banks were saying is, this is what an SMB does. You're that type of SMB, you're this type of SMB, or you're this one. And if you are, then you get this mix of product sets and services and this channel access, and those, as with everything, those aren't easy matches, right? They are not easy fits. And so I think you pointed, Kelsey, the data, well, from my perspective and from our perspective, I think what we're saying is, there's an element here which is using data to understand that first in a way and define, what is a better way to respond to SMB need. What does it mean to be a business that has just started in the last 6 months and I'm in this industry, and am I doing it right? Am I doing it wrong? Or am I just doing it better than 20% of people? It's kind of, that's what we're trying to shape. And I think you've mentioned a couple of firms there, and also the types of data that we use. At Validus, of course, we bring in accounting data, which we think is quite important because it's what they're using for bookkeeping, but it doesn't fit for everyone necessarily. And there might be some people who are still using paper, but also can you supplement it? Can you use other data sources, whether that's the transaction data? And, I come from a large proportion of where I've worked has been in a jurisdiction that does have open banking, for example, and where there is a big element of transaction data that gets standardized. And that has led to a lot of challenger banks and challenger propositions in they've found easier ways to understand what SMBs need. What do you see in North America and the US around, you mentioned standardization, normalization, around adopting kind of this transparency of data and allowing multiple players to potentially access, let's say, an SMB's accounts or their bank transactions in a way that's digital? Where do you see that going? And do you think it's been successful so far?
Me or Jesse?
Go for Kelsey.
Because we're not really a retail.
Yeah, I just thought you might have an opinion. I mean, when I think about it, I think when you talked about earlier the digital leap, I think of North America. I mean, we've kind of stutter-stepped. I think we're behind in a lot of ways as far as open data, and even the QR codes that you mentioned, like the resurgence. I'm like, why didn't people pick them up in the beginning? Like there is the U.S. has been slower to kind of implement, and I don't know, rhyme or reason, but it's hard to be highly regulated, secure, and open. And I think that's something that we're going to have to see how it rolls out. But I think the UK has gotten way ahead. There's plenty of countries. There's a picture of like a homeless man with a QR code, and I think it's somewhere in Asia, and they're like, it's this classic thing of saying like, has payments really evolved in the US, and how have we really moved that much forward, and how quickly can you move? Because you can't just move fast and break things when you're a financial institution. No one really wants that. So I think there's just a lot of progress to come for that, but baby steps.
Sure. I think, look, it would be good for us to kind of wrap up on a view of maybe our views of the future. If I just kind of lay the playing field a bit, I think, data, the data that's available to us in firms that provide services and are providers of propositions in a way, that I think your data will always drive our forward-thinking view, our development. But I think there's an important part here around how do we use data to start to enable, maybe I was going to say risk management because we talked about it earlier, but first we talked about how do you understand the need of specific SMBs and ensuring that you're responding to them and not people like them, just groups of them, as they call them, the collective them. But how do we almost be responsive while still controlling that risk and being risk averse that lenders generally have to be? where's the opportunity here to start to embed this into how banks think and how lenders think and how they lend and how much they lend? What are your views on the future? In essence, I'm asking, what's the future of SMB service and proposition while having to also balance the books, in essence? And Jesse, I'll go to you.
I think that there's the answer is it's going to the short answer is I could tell you right now, and there's about 100% chance I'll be wrong, right? And so I think that the one thing, and the banks or FIs that are gonna quote unquote win with this, right, are gonna be the ones who really take a very flexible approach to how they address a market and how they communicate kind of that approach to saying, hey, we're going to put a bunch of strategic relationships, bets down on different platforms, different potential channel opportunities. We're going to think about I think if you try to bite off everything, it's a surefire way to bite off nothing, right? And so like if you have your CEO say, we're going to digitize everything, right? Okay, what the hell does that mean, right? And so I think that figure out how you can connect a modernization, digitization effort kind of and pull that string fully for a single experience, and then figure out how you take those learnings and then apply them forward. And how do you take the data that you extract out of that and apply that forward? And how do you kind of be open about what went right and what went wrong, and then continue to iterate on that, and then and then pull that forward organizationally, and you communicate that, right? I think that as much as I'd love to say that you can embark on this and with the right partners you're good to go, right? I'd say 80% of the success of this is culture. And so if your leadership team and then the level down from leadership team doesn't buy into this, right? If they don't get how it makes their life better, if they're not incentivized for the change, and they're incentivized to make sure the way that was continues to exist. And so you have to really think about, disincentives as well as incentives, that you're not really going to, regardless of whatever massive investment you're going to make, you're not really going to create the change that you're looking for. And so, I don't know what the magic answer is. My bet would be probably there'll be a more of an unbundling of banks, right? And so you'll end up having, banks really become a service provider as opposed to a front end of a lot of these relationships. And there'll be people who create specialized services. But, who knows, right? There could also be a bank that comes out that like nails a particular vertical, or, it becomes the bank of this, right? And I think that the real thing that's going to determine, the winners or losers in this is the people who can, look at this as an opportunity to build a resilient and strong culture of people who want to be part of changing something. And once you get that powers the rest of the journey.
In a data-driven way, I think that's the key, right? Using the things that they see, the data they see.
That, right? If they don't look at it, and I think that one of the very interesting things that I think about a lot is like when you're in conversations and people use words like, it should do this, right? Or I think, right? It's very difficult to be objective when you're using subjective vocabulary. And so if you ultimately want to become data driven, but you still you make decisions based on gut or whatever that means, right? Or at least you don't make the foundational 80% of the decision on
information,
and then you apply subjectivity to the tail. You're going to end up in this place where you're essentially playing roulette with your business. And so, the data is there for a reason. Unlocking it is what you choose to do on whether or not you're going to be successful.
No pressure now, Kelsey, but I'm going to leave you with the final thoughts. I think, I've read a piece of yours on LinkedIn in the past around kind of the unlock of data. How do you get access to what you have and utilize that? What are your thoughts on a bit on Jesse's statement, which is how do we move from I think and I should to I will? and this is exactly what the data is telling me. What are the steps that we will need to take?
Like, I know what we should be doing based on these numbers.
Exactly.
I think that the core landscape, I mean, Jesse hinted to the unbundling, the reason anything is ever bundled boggles me, because unless you're upselling, into a bundle, I just think of tangled cords, right? A bundle is a mess. So, you're moving to a tech stack. You want them to be Legos, right? You don't want it to be a bundled mess of tech that has to run through a central piece, because in any other industry, your ledger isn't called a core, it's a ledger, so to extract that, one of the pieces you can use is, working with your core. I think the problem is the relationship with the core more than it is, your core provider, because you have 36 different products from one, you ask a bank about their core, they might talk about their mobile app. So it's kind of like, what is the core, was one of the questions I posed to my own team when we were trying to build a core. I'm like, what is it? But when you look at it, it's really, the core should be a smart, air traffic control, where it says, okay, money in, money out, balance here, you go there. Really? And it shouldn't be this, first has to go here and then here. It's like a ping pong, that finally drops to the bottom bucket. So extracting that data, getting the customer data and the transactional data, then you can kind of unwind pieces of it. But with Jesse's, I guess usage or reference to, if you take a bite of everything, and I think of that as me at a buffet, you put sushi next to chicken and all of a sudden one sauce goes wrong and you've created a plate of a mess. I think it's one bite at a time, and finding that first actionable piece, proving it out, find the low hanging fruit. But I think there's also interesting things with data around to the risk point, which is, when I was trying to buy a house, I was running my own LLC. Like, what's the entrepreneur supposed to do to get qualified if you don't have a W-2? I've heard people talk about sabbatical loans. You can look at someone's, track record and know that they're probably going to be employed again, or where's that safety net for, how can you use that to lessen the risk but still provide the help? And I think you're going to see different things like that for entrepreneurs, for the gig worker, whatever they, want to associate as. But I think you're going to see new products come out that'll utilize data, but in a way that's still intelligent, that actually makes more sense than saying, I can't get a loan for a house when I have a consulting client that, should be more than my salary. So you're like, why doesn't this work? And it's like, well, I don't know. So
I completely, that comes to me back to the whole thing that boggles my mind is like the way that banks think about credit and risk, right? It's just so, it's so dated. And like, if you like unwind that and you pull it back, and sorry about my constant chewing of candies to try to keep my throat dry, but, or not dry, but, it boggles my mind that I was spending some time on the phone with a commercial banker the other day trying to understand, potentially providing funding for a startup that I'm helping out. And they're like, have a heavily collateralized product, right? And he's like, well, no, we really only would lend like 50 cents on the dollar for this. And I'm like, but like, you're super collateralized, like, you're going to end up, you have kind of like really good deal flow coming out of it. Like, why wouldn't you look at it? And he's like, well, that's just the way that the bank's credit box is, or, and for me, it's like, well, you could go to a PE firm, right, and get the money, right? But the PE firm is essentially extracting a tax because of the bank's lack of flexibility, right? And so, at what point do you look at the data and those relationships, and why would a PE firm value risk differently than a bank, right? Like, realistically, a bank has a lower cost of capital. A bank is, has a bigger balance sheet theoretically, right? There should be a broader relationship. They can attach other things to it, right? There should be more flexibility on creating a strong lending position for a banking institution. But instead, there's these kind of cultural barriers and like a
guidelines. Yeah, exactly. Restrictions.
Think about it.
Then they're just so used to doing what they do. So I think that is, and hopefully we'll close it out here. I think that is kind of what we've come to, is this innovation in data that we need is about better definition, better almost bring back to reality what it is to bank, what is to lend, what are the key factors we pull in, and how do we properly segment customers? How do we utilize what we know about them to give them what they need? And in essence, be that flexible, Jesse, just not follow everything we knew before. So, it's been fantastic talking to you guys to really flesh that out. I'd like to thank you again for joining. Been a really interesting conversation, and I hope what we've described as the future becomes the future. I'm sure we'll all be wrong at some point, but it's been great to have that conversation. So thank you.
Thanks so much
for having us.
With you guys.